Hey, this is Danielle, and today I'm going to be showing you how I'm managing my DKNG trades. I have some bullish calls, and then I also have a butterfly. So, just looking at this chart here, let me tell you a couple reasons why I got into this trade. There was a daily squeeze right here. We also had a really nice bullish pattern on this daily chart. Typically, whenever you have something like this, where you have a breakaway gap after an earnings report, and then you have a bullish squeeze. I call it a bullish squeeze because it's in the context of a bullish trend. So that's why it gets the name bullish squeeze. People always ask me, well, how do you know which direction the squeeze is going to fire? Well, you look at the trend, and when there's consolidation in the context of a trend, especially after a big earnings move and breakaway gap the previous quarter, generally it's going to go to the upside. So that's what I like to bet on. But if you look at this right here, basically you can see once you throw a fib level on, I did this previous high to this most recent low, and that gave me an easy target right here at 45. That's going to be the return to the previous high. You can see that we're just below that now. We're up about 2.84%. And then my next target is going to be a break to a new high at $50. So when I'm placing butterflies, generally, I'm going to go with the quote unquote easy target first, because a return to the previous high is going to be a lot easier to make than a break to a new high. So I use this target first, then I use that target after that. So let's see what we're doing here. Well, first of all, I'll note that we've gotten here and the squeeze hasn't even fired yet. These dots are still white and red, which means there's still energy in here and it could still fire, but we've met my target. Now, as I've been noting with some of these videos, I've been pretty conservative with these flies because that's just how I like to trade these days. So you can see that DKNG has met my price target and there's still 11 days left on the trade. The reason why I like to do that is because, well, I don't like my trades to expire worthless. And if you give yourself a little bit more time, then generally you have a higher shot of your trade making money. So in this example, I did a butterfly for 68 cents. I did 7 of those, so my risk was a little bit under $500 for these butterflies. I did 7 contracts. They're currently going for 96 cents, so it's a little bit less than 50% on the trade. And I just put this on, I don't know, maybe last Wednesday. Today's Monday, so probably been in the trade for like 3 days. So can't remember if it was Wednesday or Thursday. I'd have to go back and check. But anyways, this is up about 50%. It's about $200. Now I'm going to go ahead and close this trade because I'm making targets right now. So I'm just going to right click on the butterfly, copy. The market's actually going to close in like 5 minutes. So I need to do this kind of quickly. Send. Okay, and then I'm going to tell you, if I can get out of that, I'm going to show you how I'm going to add another butterfly, because what I like to do is I will like to, I really like to add like another trade because it is continuing to break out. But let me go see if I can get this text alert out. To close, taking profits as DKNG hit my target at 45. Okay, so I'm going to send that in the trading room. Now, sometimes what will happen is you can't get filled on the butterfly right away. And so then you just have to go to your monitor tab and you can see, what the price is going for. The market price is 96 cents on the fly. I think I was trying to get filled at 95 cents. So that's pretty close. We have 4 minutes until the market closes. So I'm really kind of running at the end of the day here. But basically, I will just watch and see if the price that I'm bidding for is close enough to the actual market price. Sometimes if it's not getting filled, I'll just go ahead and do cancel, replace order. And then you can see, for example, that there's a big range here. So this fly is going for a range between 83 cents to 93 cents, and I'm bidding 95. So that's why I'm not getting filled. So I can unlock this order and I can actually just move it down a little bit. Like, let's try 93 cents. The problem is when you do that, it's going to lock it again. So it's basically going to say that, you don't want to get filled unless it's that exact price. So let's just try to unlock it, see if I can do 93. Probably not going to have time to put on another trade, but this is what I was going to, okay, there we go. So I'm filled on that. You can see that I also have the long calls on it. The long calls are, making more money than the fly was. I was up $200 on the fly. The long calls are up, let's see what, $1.30 a piece. And I have two of those. So $270. So more dollars money wise. But the risk was also a lot larger because each contract on the calls is, $3.30 versus 68 cents. So sometimes I'll layer the butterflies with the long calls. Anyways, let me see if I can get filled before the close. So now that the first target's been hit and we still have another 11 days, I actually just want to add another one. So I'm going to do 45, 50, 55. So I'm going to add, and these are only going for $1 a piece. So I'm just going to add two of those, see if I can get a fill in the last minute, risking $200 to make a max of 7. Okay, there we go. So I am filled. So that was the way that I'm managing DKNG with this butterfly. Oftentimes if I meet the first target, that's going to be the easy target. Like I said, the resistance zone, then I can take off that risk and then I can add another one. I also generally like to layer these. So, sometimes I will have one trade on where I'm targeting 45, and then I'll have a second trade on where I'm targeting 50. In this example, I couldn't do it at the same time because I was using the same strikes. So once I got out of the first butterfly, which was using this 45 strike, I was able to add another one. So basically now what I have is taken profits on half of my trade. I have left the calls on. The reason why I left these calls on is because there's still 24 days of life in them, and I still have a price target of $50 a share. The butterfly had to be taken off because it met the target, and now I added another butterfly where I have a $5 range. So basically, with this fly, it's slightly out of the money. You can see that DKNG is trading for 44.86. Okay, ding ding, market's closed. This one's trading right now at 44.86. And so what I have is I have a $1 trade where I have a range of $5. Okay, so between $45 and $50, that's where I can really profit. Now that the market's closed, I'm not worried about my trade. I can explain it a little bit more for you. So $45, $50, $55. Okay, so for one contract, I paid $1.04. And you can see with the risk to reward, I'm risking $104 on this trade. And the max profit is going to be just shy of $400. So I say it's about a 1-to-4 risk reward ratio. Now, if DKNG just hits 45 and rolls over, I'm going to lose money. Like I said, it was $200 of risk that I put on that trade, but I also just took $200 of profit out of it. So it's kind of a free trade at this point. These calls, I will scale out of them on the way up. So basically what I want this to do is I want it to break out to a new recent high. So that's going to be up above 45.62. Ideally, I can take profits on one of them at 47.35. That would be the Fibonacci extension target. And $50 is going to be my next target. So I'll basically scale out of those on the way up. Now, DKNG does have some overhead resistance. It was once at $74. But I think, once it could get up into this zone, especially if it could break above 50, that's where it could be retracing all the way back up into here. So I think overall, the market was rolling over at the end of the day here today. We hit 51, 57 in the S&P futures, and then we just got a rug pull right at the end of the day here. So I think that DKNG was a bit of a honey badger. It was just doing its own thing. It did pull back slightly at the end of the day. But the thing about the market is right here, we're seeing it topping out a bit. And so if you can have some of these tickers in your portfolio where they're just kind of really doing their own thing, that, can benefit you. So right now I have DKNG I traded GTLB for earnings, so we'll see how that plays out. And then I have IBM and Microsoft. So these are the trades I have on right now. Generally, I just have, maybe like 3-4 tickers in my portfolio at one time. But if I can take a couple $100 out of each one, that would be perfect for me. So hope you found this video helpful. I love all the comments. Definitely leave me some comments, feedback. Tell me what you liked, what you didn't like, because that is what helps me when I make more videos. So hope you have a great rest of your day, and I'll see you in the next one.